It's Monday, so let's talk about the markets. If you enjoy these videos, leave us a like, a subscription, all that standard YouTube algorithm nonsense. So, as far as the monthly time frame goes, that isn't going to change much week to week. The levels are still the same, namely we have monthly resistance at 23.3k, which is still providing resistance. The monthly pullback level of support, if this move down continues, is between 19.5 and 20.5 on the monthly time frame. The final level that I will add on the monthly that's worth being aware of is previous month's low. So we've seen in the past where previous month's low, previous week's low, previous day's low have sort of acted as short-term inflection points or areas where failed breakouts and failed breakdowns may form. So as far as the two big monthly levels, it's obviously the big resistance at 23 and the support at 20, but I would keep an eye on this intermediate level at 21.3 in case the market isn't as straightforward as it may seem, or if we start doing business closer to weekly and daily levels in the absence of a larger pullback. But again, the big boys, resistance, support, and just be aware of where previous month's low is in case we start trading down there. So that's the monthly picture. Obviously, if this month ends up being really bullish and breaks out from the range high, the continuation target for that is around 30k, which is the bottom of this previous range. You can use the wicks to get the last low before break, or higher towards the candle bodies at 35, but it's some version of 30k. For now, we don't have that luxury, given we are struggling with the resistance that's immediately overhead. So I think as far as the monthly goes, that's really all you need. Going down to the weekly time frame, and we're going to get rid of these monthly levels quickly, just because we know where they are, and we're going to add some weekly structure while keeping previous month's low present for a reason that will be obvious in a moment. Similar picture on the weekly, that is to say the market just rallied into the top of the range and got stuck there. All the weekly closes have at the moment been below that weekly level, so nothing to write home about. As far as weekly support, I don't think we're there yet. There's no weekly level here that makes me think, okay, we've pulled back enough from the range high, and therefore we're now at weekly support. To me, that's not really the case. If anything, the earliest iteration of weekly support would be previous month's low, and the idea there would be that the market tried to break down from previous month's low, was bought up and then reclaimed. At the very least, that gives you an invalidation and a shorter term trading range to deal with. That will be fine, but we don't even have that evidence at the moment. So we have had 2 red weeks in a row, but given we're dealing with monthly and weekly resistance levels, that pullback from monthly and weekly resistance hasn't yet taken us to monthly and weekly support. So there's still a chance that this rotation continues lower, and at the moment from the monthly and weekly at the very least, there are no levels that make me think, okay, we're at confluent high time frame structure here. The earliest, as I said, would be 21.3, and the bigger one is around 20, and I'm just not a fan of fading these reactions from high time frame levels before they reach other high time frame levels. That kind of summarizes the level to level approach. Now, the reason I mentioned that this dotted previous month's low could be useful is if we look to the left, there is some semblance of weekly structure based off of this high or close specifically from the 5th of September. If we drag that across, we can see we had some support built up there before the final rally into resistance. So there is a world, if the market is particularly bullish and doesn't offer deeper pullbacks, I would expect a spike below previous month's low that doesn't lead to a breakdown, eventually leading to a close above this weekly level at, let's see where that is. Let me move my drawing tools out the way. 21.8, 22k, whatever. So again, the bigger pullback scenario as always is obvious, right? It's the all roads lead to Rome, 20k support in one way or another. That's clear. But as always, we need to keep aware of what the shallow pullback scenario might look like. And the only decent candidate that I can find on this occasion is a failed breakdown below previous month's low into weekly resistance at around 21.3, 21.5 or thereabouts. But even taking that conservative case, we're not there yet. So even that aggressive trade idea isn't available. And again, you'd need to see a failed breakdown as opposed to just buying the lows and hoping they hold. You want to see some absorption should the market decide to spike, your classic failed breakdown, SFP, whatever. So that's why I've got that. As mentioned, all roads lead to Rome as far as 20k support goes. On the weekly time frame, the most straightforward way of mapping that would simply take this high or this candle, market structure level, whatever you want to call it. That comes out at 20.7, 20.6. And again, bearing in mind it is a weekly and monthly area, there is plenty of room for wicks lower as long as the high time frames don't start closing below that level. So again, taking some sort of spike scenario in mind, we could have a move below previous month's low into weekly support, likely overshooting it a little bit, and that would be a nice orderly pullback into support, worth looking for entry triggers and signs of absorption before trading it back inside what would then be the range between 21.3 and 25, ideally hoping that this was the high time frame pullback before another attack of the range high and higher. But again, from a level to level point of view, even if we do get a larger pullback that holds, so let's say we do reach this weekly level and bounce, all that would happen from a purely technical level to level point of view was that we will have reclaimed the range low at 21.3, the range high is still at 25k, and then you'd have a midpoint at 22.7 or somewhere there. A bit convoluted, but I'm just trying to map future scenarios, given there are none at the moment. As we'll discuss on the daily time frame, we're not at support, at least in my consideration, or at least as far as the monthly and weekly timeframes go. So we have to kind of look ahead to see where is support. My eye is drawn at the earliest to previous month's low, and perhaps all the way down to monthly support at 20k. Those are the higher conviction setups, the ones that make sense. And if the market doesn't want to get there, we'll have to carve out intermediate levels in the interim, which we will discuss now. Hopefully the higher time frame picture is clear. If it is, leave a like so I know these videos aren't completely useless. Now, the daily time frame is still trading rather technically. So you'll recall in the last Monday Markets episode, we discussed some version of this consolidation where the range high was this range high at 23.7k, nice resistance before a dump. And the range low we had as some version of basically 22.5k here. And I think the argument at the time was you could even box out this cluster if you want. But in any case, I think the 4-hour time frame shows this range rather well, which is specifically this consolidation here, right? We had a big range here, break to the downside did nothing, break to the upside did nothing, we traded back within the range, the levels were really good, and now we've broken down once again. So at the moment, on the daily time frame, this is a range breakdown, which is typically bearish. Now, the confounding factor here is that none of the breaks that we've had from this consolidation have led anywhere. So break to the downside didn't lead anywhere, break to the upside didn't lead anywhere, and we have a break to the downside again, and there is a chance that it leads nowhere and again gets reclaimed and we're stuck in this hellish 23.8 to 22.8 range. That's completely plausible. However, until that range is reclaimed, I have to treat this breakdown as genuine, especially because those of you who follow the channel know that I don't generally trust double fake outs. We've already had a failed break to the downside once, and now that we've had another one, it's at least more likely to be a real breakdown than a fake one. And obviously the invalidation for that idea is simply the market reclaiming the range and spending more time here. That would just be painful and hellish, yet completely plausible given how the market's been trading. The volatility, I mean, this 4-hour chart is completely miserable, so we could just be stuck in a mean reverting market. But purely technically on the daily time frame at the moment, I'm hard pressed to make a bullish argument because the monthly is coming off resistance and is not a monthly support. The weekly is coming off resistance and has not reached weekly support, and the daily time frame broke down from its daily range and has not reached daily support. So there's no setup at best for me, and at worst it's just a breakdown from the range, which isn't a long signal until some stuff changes. Now, the counter argument, which you must always consider, is that this move here is a higher low relative to the last low. So if we take a sort of zoomed out market structure point of view, we would make the following argument that this is the high, this is the low. Let me just move this out of the way. This impulse was the higher high, and therefore the market here could make a higher low before then making a higher high and attacking the range high. I think that argument is fine. It's reasonable. There's nothing wrong with it. My issue is, if I'm trying to buy this higher low, it's not entirely clear to me where the invalidation would be, unless you just want to use the low here a bit arbitrarily. So that's not good enough. And even from a relative risk-reward point of view, for me at least, I can't just blindly set a stop at the low and say, well, this is the higher low, so I'm going to target a higher high. I still have to consider the intermediate time frame levels that are in front of me, and for my system we broke down, and so the bottom side of the range or even this entire consolidation is still resistance. So even from a risk reward point of view, if I try to articulate the higher low thesis in a way that would resonate with my system, let's say something like this, this is the higher low, my invalidation is at the low or maybe even at the lower low, but let's, to be charitable, just say the invalidation is at the low made. I can't simply ignore these levels here because they're relevant with my system. And you can immediately see that once we start grinding up against this previous range low support resistance thing, there's not even a 1-hour trade for me to take there on the daily time frame, and that sort of falls below my minimum standard for risk reward as far as qualifying trades go. For intraday trades, I'll happily take 1-hour trades if the probability is high enough, but for daily oriented swing trades, 1 hour just simply doesn't cut it. So I think I'm sort of philosophically okay with people making the argument that sort of low, higher low, higher low, that's okay. But for me, the resistance and the range we broke down from is too close in order to articulate that into a trade idea. And I guess my secondary objection is, as we've discussed on the monthly and the weekly, and even the daily to some extent, there's no compelling structure around this price where I could look and say, hey, this makes sense for a higher low. Not only is it structurally a good area to make a higher low, but we also have high time frame support on the weekly, monthly as confluence, or even the daily. I don't have that argument available to me. So it's kind of a sort of Hail Mary attempt, if you will, at a higher low, because I have to ignore resistance levels that we've just broken down from, and then I also don't have a particularly compelling structure to use as the edifice for that higher low. I just kind of have to hope, knowing that monthly levels are below us, weekly levels are below us, and all the better levels to do business for a higher low haven't been reached yet. So again, no strong objections. It's just, for me, it's very hard to translate that into a setup, given that it's not oriented on high time frame support, and I would have to ignore resistance levels, which generally doesn't end well for me in my trading experience. So I hope all of that makes sense. I think the prevailing view here is that as far as bullish setups go, the earliest I could start to get involved is at previous month's low, and that hasn't been reached yet. And in the absence of that, given the daily broke down from this consolidation, any rallies, while they might look attractive, would still be rallies into resistance given this recent breakdown. I think only if on the daily time frame the market starts closing back above the range high at 23.8k, then I could make a more concrete argument that this was the key resistance level before the breakdown, and the fact that we've reclaimed that after making what looks like a lower low in terms of intermediate market structure, then that starts to look attractive. But in the absence of that, I just think for me, all the good levels are still a bit below us, and the daily time frame is mixed at best. So there's not enough evidence for me to consider the higher low trade, simply from what makes sense given the levels I care about, what's below us in terms of weekly and monthly support, and what's above us in terms of this daily range. I hope that makes sense. And also, I don't think you're missing out on a whole lot, at least recently, looking at this very sad 4-hour chart. So perhaps we'll be rewarded for waiting for evidence of better, higher time frame levels and or setups. This could also just be completely useless 10 minutes of your life that you spent listening to this, and we just keep sort of one chopping around here in one way or another. That would be very painful, but I could only trade what's in front of me, and this is what we've got so far. Hopefully that makes sense. It's a bit rambly, but I'm just trying to give as much transparency into my thought process and hierarchy of levels, if you will, as possible. As far as ETH goes, also just very quickly, sometimes colloquially I'll just look at a chart and I'll say, well look, the big levels, the ones I care about are below us. Above us, it's a bit shit. So if it gets above us, I might look for something later. If it goes below us, that's a lot clearer, and you can't force me to do business right here. So again, very casually, kind of good setups here, good setups here. All of this can fuck off. A bit crude, but often how I think of markets. Now, as far as ETH goes, nothing too dissimilar, to nobody's surprise. The monthly time frame's still being plastered by the range high. I say plastered, it's barely moved, but that has been the resistance level at 1680, the level you're very familiar with. The weekly time frame is just notoriously choppy and bad. It essentially hasn't moved anywhere in 5-6 weeks, so I'm not going to have strong views based on that, and certainly not going to have flip-floppy views. The daily time frame is the one we spoke about in last week's video, and I think we were as charitable as to draw a range between sort of 1500 range low and 1660 range high, or something of that nature. And even this daily structure has been very choppy, but at the moment, the one phrase kind of summarizes my view of don't diddle in the middle. So we've had price action at the range high. We haven't yet had price action at the range low. I think that'll be interesting kind of for a short to medium time frame bounce, if the context is appropriate. But at the moment, we're sort of slap bang in the middle of this consolidation, the point of control. Don't diddle in the middle. And so for me, there are no real setups to be had here. If anything, it's retesting the range midpoint from the underside. So that's resistance. But as we've often seen at the range midpoint, even if you get a breakout from resistance that starts to look good, and you think, oh, well, that's a support resistance flip, I'm going to buy that. Because it's the mid-range and it's just choppy, the reclaims don't really mean as much as they do at the extremes, and it peters out into nothing. So I think some skepticism is warranted positive there as well. The only two things I'll say on ETH, the range low is a tradable area in the appropriate context at 1500, either just on a straight test or a failed breakdown or something. That's at least an area to look for setups, because by definition it's an extremity. So in the short to medium term, if the market wants to go there, that makes sense. I'm not going to diddle in the middle and risk my money there. And the range high would also be by definition a tradable area. So again, the extremities are good to go. The midpoint and point of control is not good to go. Higher time frame pullback levels wise, Bitcoin is more straightforward, that it's in one form or another around 20k. As discussed before, ETH is slightly less straightforward because the chart just isn't as clear and doesn't have that omni support. I think 1400 at the prior all-time high and this former range low is still a good-ish level. And as we discussed previously, on the daily time frame, it does look a bit messy. So I think you should be charitable and be willing to include this kind of the edge of this range closer to 1370, 1380 as a potential additional zone to wick into if the market moves lower. So 1400 makes sense. Breaking out of the range high in one form or another, just kind of eyeball how obvious this resistance is, also makes sense. Diddling in the middle, you're not going to take my money that way. So that's kind of all I've got for ETH, and similar agony on the intraday with not much to show for it. I mean, this is rather miserable. Now, final point I'll make is about legacy. We had a decoupling, which is good. Unfortunately, it was in the wrong direction. We had strength in equities and risk indices in particular, while our market puked. So that's not good. Those correlations acting against us. As far as the S&P goes, it front ran my level of support at 39.11. I think if you took Don's level, unsurprisingly, it was better. Based off of the highs of this consolidation, closer to sort of 39, 40s and 50s. So that's fine. Equity, I mean, look, it's hard to be too optimistic about, oh, look, equities are bouncing from support when the correlations don't bear that out for crypto. You know, I only care about equities insofar as the correlations are tradable and or favorable for crypto. And if they're not, what good is it to me that equities are bouncing from levels if Bitcoin doesn't bounce with them? So a bit of reservation there. Hopefully that changes, but in the short term, that type of decoupling isn't great. The only other point I will make on the intraday point of view is that bigger picture, the market is still rejecting from this weekly, monthly range high at 4,100. That definitely needs to be overcome for weeks and months of upside potentially into these deeper 43, 4,400 levels. At the moment, we just kind of, you know, the range is the same, 3,900 to 4,100, and that's where we seem to be stuck. And even within this consolidation, now that we've had the rally that crypto didn't take part in, we're essentially in the middle of that larger range between 4,100 and 3,900. If you wanted to add some levels onto this, I think it's a decently self-explanatory previous support turn resistance type of pivot in the S&P. So even if you wanted to put on the correlation trade that, look, we decoupled in the short term and didn't follow on the bounce, but now we will, I think it's a rough area to do so because we've rejected from key resistance, we bounced in area of support and ended up at lower time frame resistance right in the middle of that range. So you're in a tough spot, even if you have favorable views on correlations, because you're diddling in the middle of the high time frame S&P range. It would have been really nice, and I think a tradable leg, if Bitcoin and crypto followed up this move from the lows. So you're essentially saying weekly support on equities, consolidation in crypto. If this weekly support bounces, the crypto consolidation is going to bounce as well. Unfortunately, that didn't play out, and I think that idea is far less compelling now that we've already had the move and are at the midpoint of the range. So there we go. It's a bit of a sad state of affairs, at least for me, because looking at the market, we have monthly and weekly support not yet reached. Daily is chop at best, breakdown at worst. Worse. I don't know. I don't speak English. As far as ETH goes, still similar picture as far as resistance, sort of reeling off the range high. Weekly time frame, nothing burger until either 1400 or a real breakout. Daily time frame, crappy daily range, and even within the crappy range, you're diddling in the middle, so nothing to say there. And as far as S&P goes, decoupled, so we didn't get to enjoy the bounce, and feels a bit late to chase it, given we're at the midpoint of the 4,200 to 3,900 range. What a waste of everyone's time. In any case, if you have picked up, I don't know why my voice broke there. I'm really looking forward to puberty. I've heard my body's going to start to change, and maybe I'll start to like girls and all that fun, exciting stuff. In any case, forgiving the voice crack. The week ahead, courtesy of DB, we have grayscale oral arguments on Tuesday, as well as Technical Roundup newsletter, which is obviously the high impact event on that day, trletter.com. We have good old Jerome being trotting out in front of all sorts of committees to talk about the economy on Tuesday and Wednesday. On Thursday, there is a committee hearing on crypto where a bunch of boomers who don't really understand all too much but want to regulate it are going to give us their ill-informed opinions on the market. And then we've got some economic data on Friday with non-farm payrolls and unemployment rate. I think unless something really spicy comes out of the committees, which doesn't tend to be the case, and as long as the hearing isn't like a complete disaster, it's mostly just old boomers posturing for votes. I think Friday is going to be the highest impact event if we're going to have one, because that's actual economic data with non-farm payrolls and unemployment, and we can all fight each other on Twitter about soft landing, hard landing, big flip. That's all from me. If you enjoy these videos, leave us a like. I need to go to my English class, as has been evidenced by this video. See you later in the week, and yeah, thanks for watching.